Hey guys, welcome back to another video, and today I'm here to talk about 3 stocks that you guys should buy and hold forever. So those are two very important things when it comes to investing in the stock market. It is all about what stocks you buy. If you are a single stock investor, it is somewhat about timing, and it is about, holding for the long term. That's what my portfolio is about. That's my investing strategy. I'm not buying companies to hold them for one day, 3 weeks, 6 months. I'm buying companies to hold them forever or until I have a different consensus for their stock price or where their company is going. So without further ado, let's get right into this video. If you do enjoy, be sure to smash that like button. Also subscribe to the channel. I'd really appreciate that. We're on our way to 600 subscribers. Let's get right into it. So the first stock we have today actually is ticker symbol O. We have an earnings presentation right here that we'll get into in a second, but ticker symbol O on this one. This is Realty Income. This is a real estate company. This is a REIT, an REIT. That is the sector that this company operates out of. If you see right here, real estate, 100 most popular stocks, very popular stock. This stock is very cheap in comparison to where it should be, in my opinion, where it's going to be in the future. So this company lives off of debt. That sounds bad initially. That sounds like, okay, why would I ever buy a company that is, their whole business model is going into debt? This is because they're taking out loans to buy more and more properties. They cash flow more than their loan is. So this is a cash cow. They pay a whopping 5.29% dividend. This is almost a 6% dividend from this company. There's not any other companies that consistently raise their dividend and have it at 5%. There might be a high yield ETF that gives you an 8% dividend for 1 year and then goes to zero. But besides that, there's no, stocks or ETFs even out there that are paying a consistent 5% dividend. That is unheard of. So we see that, and this company is locked in for the long term too. Let me not get ahead of myself. Let's look at this right now. So strong dividend track record over 30 consecutive years of rising dividends. Every single year, this company has risen. They've taken their dividend to more than it was the year before. Amazing. They have a 13.5% compound annual total return since 1994. This is beating the S&P 500. Beating the S&P 500. A stock that is outperforming the S&P 500 every single year is a stock that I want to own. That is all you can. As a retail investor, me and you probably watching this, I don't think you own a financial firm. If you do, great for you. I'm very honored that you're watching my video for investing advice, but I don't think you do. So if you can outpace the S&P 500, you have done your job, even by 0.1%. If you can buy single stocks and make a higher return than the S&P, you need to pat yourself on the back, because that's, almost impossible. So we see that this company is looking very good for the long term. We see their historical average dividend yield is around 6%. Their historical average AFFO per share compound annual growth rate is around 5%. So this gives a historical average total operational return of 11%, more than the S&P 500. Diversified and high quality portfolio. The companies that this company, Realty Income, actually rents their properties to are huge retail spaces: 7-Eleven, Dollar General, Walgreens, Dollar Tree, Lifetime Fitness, EG Group, Wynn Resorts. That's just to name a few. We also have LA Fitness in there, Home Depot, CVS, Tesco. I mean, these aren't companies that are going anywhere. Walmart and Sam's Club. These are not companies that are, going anywhere. They're here for the long haul. I feel very confident that these companies are going to be around in the next 30, 40, 50, 100 years. 10% of them are grocery stores. People aren't going to stop buying groceries. 98.8% are convenience stores, home improvement, dollar stores. None of this stuff is stopping, anytime soon. People just need it. There's nothing that can take its place. So it's great. I mean, and a lot of these places are locked in a long term, like 20, 30-year leases that are being renewed after those leases are up. But they have that guaranteed cash flow. That's why they're able to increase their dividends every single year, quarter over quarter, year over year, every single time, because they have this consistent price increase. They have a consistent, customer base that's still coming back, and I don't think they're going anywhere. So yeah, there's a lot of numbers in here that you guys could look at, but the bottom line really is that Realty Income is a great diversifiable stock to have in your portfolio. I have a lot of stocks in my portfolio that are technology based. I have some restaurant companies, some retail companies, stuff of that nature. But having a company that's a REIT is a great way to diversify your portfolio, because a lot of times, even when the stock market is down, so let's take a look right here at the past 5 years. Let's look at Realty Income. They're down 3.35%. So also not related, but this is the best time to invest in Realty Income. Anytime near here in the future, you're probably not going to get it for the same price, because there is going to be a rate cut cycle, it looks like. And when the rates get lowered, companies that take out a lot of debt, a lot of loans, tend to go higher. So that's usually just how it happens. You can check the rate hike and cut cycles, and then you can compare it to the graph of this stock. They're pretty similar. So let's also look at the past 5 years. So let's compare this to the S&P. You see, this does not move anything like the S&P 500. It's actually moved less by a lot. It's down. The S&P 100 is up 100%. So Realty Income isn't actually down. They're compounding at an annual growth rate of their dividend, if you are reinvesting that dividend, which I suggest you do. So they're not up 100% for sure, but they are up a good amount. They're up a good amount with that dividend. It's not something to scoff at, about 30 or 40%, if I'm doing my math correctly, after that compounding annual growth rate. So they're not up nothing, but they're not up what the S&P is. That's why we have diversification, because this is just the past 5 years where the S&P's been on a tear. Up 100% in 5 years is not what it usually does. We can see that the compounding annual growth rate, even for just the past 3 years, has been almost 20%, which is not normal in the stock market. We're in a very bullish cycle here over the last couple of years. So let's check out O again. We see we're in a rate cut cycle. It looks like O is gonna rise because of that, and O is also just a great company. It's very established, very known in this space, and I don't think they're going anywhere. This is a great one to hold in your retirement account. So that's the first stock that we have for today. The second stock that we have for today is another one of my favorites. I actually hold some of this company. I want a lot more. Should have gotten more when it was lower, but can't complain. This is Google. Ticker symbol GOOGL, or either GOOG. It does not matter which one you invest in. This one is up 60% in the past year. Year to date, it's up 31%, and in the past 5 years, it's up 226%. So Google, you might look at and be scared to invest in because it's up so much, but do not be scared. Google deserves to be up this much. They deserve to be up more. Their PE ratio is still low at 26.82. I was talking about this company when their PE ratio was below 25, below 23. I'm not mistaken, they did have a 22 PE ratio, which is absolutely absurd for a company like this with a competitive advantage like them. No one else is in this market. Waymo. That is why I'm buying Google, just to be, completely transparent. It is because of Waymo. I very much believe in Waymo and what they're doing with that company. I think that is just one of the best companies I've ever seen, honestly. The room for expansion, the sector they're in, I think that this is an insane time to get in. A lot of people don't even know that Google owns Waymo. A lot of people don't know that, so it's pretty insane that people still don't know that, but they're everywhere. If you live in San Francisco or some parts of Los Angeles, Arizona, Texas, they're expanding very fast. You're probably going to see them in your city soon. They're in a lot of major cities. They're undercutting Uber because they don't have drivers. It's an autonomous vehicle service. You can look more into it if you want, but that is one of the main reasons I'm investing in Google. I think that this is the future, honestly. And I mean, Google has a lot of future-defying technology, but that is one of the great things about it. And we look at their financials here. This is a company that's doing great. Revenues are up 14% year over year. You can never complain about that. Their net income is up 19%. Total costs and expenses, it's up 14%. I mean, that's fine. Their net income's up 19%. Can't complain. Alphabet revenues and operating income, we see that this is also up a lot. We really like that. 14%. That's a good growth rate for Google. That's, mid-teens is very good growth rates for companies in the technology space. Usually you want it to be between, the mid-teens and the low 20s. That's a very good growth rate for any of these companies. You really like to see that. Google services revenues and operating income. We know they have one of the biggest, ad services in the world. That's actually up 13% year over year. We see that their Google search is up 12% year over year. Subscriptions, platforms, and devices. YouTube TV is looking amazing. A lot of new members on that, up 20%. And then we see the Google network is down a little bit. Not worried about that. Operating income, 40% margin, very competitive. No one else is offering that. We see Google Cloud revenues are up 32% year over year. That is insane. And their margins are up 20%. So margins up 20%, revenues up 30%. Really like to see that. I really like to see that, honestly. That is a great stat to have, especially with Amazon. That's a hint to the next stock, but Amazon Cloud, what they're doing over there, AWS, Amazon Workspace. I mean, it is just insane that Google is able to even take market share of this. So Google's capital expenditures, those are going up as well, which makes sense. You need to compete with other brands as, time goes on and things get more and more improved. But yeah, I mean, this is just a lot of numbers, really not anything pretty like what O had for their investor slideshow, which was actually a very great one. But this one is great too. Just a lot of numbers. We see that Google's doing great. They're making a lot of investments, actually. Free cash flow is going down a lot. And I don't hate that. I think that Google's doing the right thing. They're investing in these great companies, and that's how big companies continue to grow over time, is they invest in assets and things that are going to make them more money in the future. That's obvious. You guys know that if you're watching this, but Google is investing in the right things, in my opinion, and I think the companies that they're investing in are already panning out. And I mean, they own a lot of companies. If you go through Google's actually their portfolio of what they actually own, it's pretty insane. I mean, even just here you can see, I mean, Google has the Google Cloud, Google Services, and then Google Service segment includes products and services such as ads, Android. They own a whole, network of cellular devices, second to Apple, but definitely huge. And a lot of just different components of electronics use the Android development system, not Apple, because iOS is so foreign to some things. That's a different topic to go into. Chrome, a lot of emails that, schools use. I mean, just everyone uses Chrome. Devices, Google Maps, it's literally everywhere. Google Play, also on a lot of Androids. Search, you have Google on your computer. You might be watching this on YouTube right now. You probably are, because that's where I upload these videos. Also owned by Google. So very great company, very future proof. That is the goal for this video, is to show you guys 3 future proof stocks, because these are stocks that I want you to hold forever, never have to sell them, because their business model is so sound. Their business model is touchable. Honestly, with Google, their way that they invest, the CEO there, their business model is untouchable, in my opinion. I think that what they're doing is great. This is a good time to buy all of these stocks I'm showing you. It's a great time to buy. It's not just a stock to hold forever that's at a fair price. It's a stock to hold forever that's at an attractive price. So that's the second stock today. We have Google. Great stock, great company. I'm wanting to buy more, even at its high price. There's a low valuation for the company. I think you're missing out right now if you don't buy that. But the next stock is AMZN, ticker symbol. This is Amazon. You guys definitely know what Amazon is. They have Amazon AWS. This is one of the biggest cloud computing networks, software, whatever you want to call it, services in the world. It is the biggest. They have the highest market share because this is one of the first ones ever made. They have, a grasp on the market, one of the best ones for that. We see that over the past 5 years, this company has taken some turns. They've had some, tough dry spells over the past year, down 10%, but they're up 25%, year over year. Then we see year to date, they actually dropped 25% at one point. Now they're back up to 5%. So I'm up a decent amount on this company. Don't have a lot of Amazon, but I definitely do want to get more. I'm a riskier investor because of my young age. I do put more inside of companies that have a lot more volatile of stock prices, like ELF, AMD, SoFi, companies of that sort. I have a little bit more money in just because, I'm trying to go big or go home, essentially. But as time goes on, I'm going to diversify my portfolio and put more and more money into, Amazon, into Google, into I mean, that's just what happens, as I want to stop taking risks and kind of just make sure that I have that money there. So Amazon is one of the best for this because of their, untouchable business model. This is a company that has so many different, aspects to their ecosystem. They've built an amazing ecosystem that is comprised of, AWS, which is now, we see AWS is 18% of their net sales. And then we have North America is 60%. This is all the way from Amazon Prime to Whole Foods to Amazon TV, Amazon Movies, Amazon's actual website, international. This is all the same things. We see their operating income is actually up 31% year over year. Love to see that. That's what Amazon does. Operating income TTM up 40%. Amazing. Net income up. I mean, if you have growth rates in the 40s, 30s, or 60s, your company is doing something right. You have a very great competitive advantage and you are doing the right thing with your company. We see segment results in North America. Their net sales are up 11%. This is their actual website. This is what Amazon is actually selling. Love to see that 11%. It's not amazing, but it's also, this is not a very high margin business for them. This is kind of just the thing that makes them, it's a cash cow. It makes them a lot of money, but it's not going to, grow an insane amount year over year, and that's fine, because they have other segments for that. They have their international segment where their operating income is up 448% year over year. This company is expanding internationally very fast. We see that their net sales of AWS, this is one of their biggest growing segments of their business. This is their cloud software. This is their computing service. This is up 17% year over year from net sales. Like to see that. Usually growth rates are a little bit higher with this one, especially in the operating income aspect. We see that it's up only 9% year to year. If we look at this graph, it's actually, down a little bit in the second quarter, down to where it was back in 2024. So I don't love to see that, but I also don't mind it. This company is, still in the beginning stages of this, and I think they're taking market share as the days go on. Free cash flow, they're down 66%. A lot of these companies, if you look at a lot of these companies, I don't want to speculate or anything, but they're down 66% year over year in free cash flow. Google is down 61% year over year in free cash flow. These companies are investing a lot of money to keep up with the AI race. I think there could be an AI bubble. I don't want to make speculations. That's for another video. But it's interesting to see how much the free cash flow is diminishing in all of these great companies. And it's happening with all of these big companies. The free cash flow is going down because they need to expand their CapEx to keep up with the next one. It's happening in Meta, it's happening in Amazon, it's happening in Google, it's happening in Microsoft. All of these huge companies, even Apple, are increasing their CapEx expenditures quarter over quarter, spending more on AI, more on, everything to try to keep up with these technology beasts. I mean, these are companies that have billions of dollars that need to allocate that towards, improving and being better than one another. They're all competitors at the end of the day. They do have certain deals where they work together, but, they're competitors. This is business. So those are the 3 stocks I have today, guys. All of these stocks that I just showed you, I think you can buy and hold forever. I think that they're very safe bets. None of these are risky because they have that backbone of having a great business model. Leadership is amazing, and they've obviously just the price performance over time has been immaculate, just something that you can't compare to other single stocks. These are companies that are dimes in a dozen. You can't find these just by, scrolling through the NASDAQ. They're not going to be in the S&P 500, just randomly. These are companies that are on the top that have performed year in and year out, and companies that deserve their spot to be in the video of 3 stocks that you can buy and hold forever. So if you did enjoy this video, be sure to smash that like button. It really helps me out a lot, helps out the algorithm, push this to more people, show them these stocks that they could be missing out on, especially the first one in this video. So yeah, if you did enjoy that and want to see more stocks I'm buying, you could check out my recent videos. I've talked about a few of those, but be sure to subscribe. I'm posting daily content on the channel. This is every day. We have a new video coming out. I'll catch you in the next one. Peace.